So today I want to answer the question, what is the spread and how does it affect your profit? So have you ever noticed that whenever you place a trade, it always starts with a loss? There's some kind of a small loss that the trade starts off with. So that is because of the spread and the commission that the broker is taking. The spread, if you want it, the definition technically is the distance between the bid and the ask, and it is measured in pips. So what the broker does most of the time is that the broker is going to allow you, but then is going to give you leverage and all those things. But then what happens is, if you place your trade, so if you place a buy trade right there, so let me show you what happens, right? So let's say the market is moving like this, and then you are expecting let's say the market to push to the upside right there, and then you place a buy trade here, right? So I'll try to put a graphic here that shows you the real trade, right? And then the stop loss, right? So you put a stop loss right here after that, right? What happens most of the time is when you place a buy trade right here, so your buy trade is going to be triggered at a slightly higher position, and this happens because the broker, they want you to pay a small commission before your trade goes in profit. So as soon as you place your trade, a small commission is taken from the broker, and then you are going to be buying a slightly higher price that you wanted, and if you are selling at the slightly lower price, right? So you're going to see that when you place your trade, the market is going to be, let's say a buy trade, the market is going to be a little bit lower, right, than where your buy trade is, and that distance there is called the spread. You are going to see that the bigger the lot size is, the higher you pay in commissions for most brokers, right? Because what happens is, so let's say if you place one trade, right? So if you place one trade, you are paying a commission for that trade, right? But if I'm placing many trades with bigger lot sizes, then the commissions can add up and add up and add up, and in the long run, you are going to see that this is going to affect your trades, your profits, right? If you want to learn more about this, I think the best way is to use if you are using a backtesting tool, right? So to see this in real time as fast as possible is if you are using a backtesting tool. If you backtest your strategy and then you set your spread like 2 pips or 3 pips, right, or something like that, you're going to see that if you are placing your trades on a lower time frame and you're using higher lot sizes, these spreads are going to add up, and they are going to cost your trades in a long run, right? So the truth is, higher spreads can erase small gains, especially when you are scalping. Why when you are scalping? Because when you are scalping, you are placing a lot of trades. So a scalper can place 50 trades, 100 trades in a week, but a swing trader can place 1 or 2 trades in a week, or even no trade at all. Now what happens is, the more trades you place, the more commissions you pay. But at the same time, you are going to see that if you are scalping, right, so there's those high frequent traders. Let's say you are using a trading robot, right, and then you are placing those trades in and out of a few ticks, you are going to see that you are going to be paying much more high in spreads, right? Now that is exactly why you need a broker that offers you lower spreads if you are using strategies like scalping, right? So for me personally, I use Deriv, right? Deriv offer 0 spreads on some pairs and some instruments, right? So if you are trading like synthetics and some other pairs, you can get 0 spreads. If you are trading stocks in any broker, the commissions are going to be very, very high in most of the time, and also these commissions can vary depending on the supply and demand of that market and the liquidity also of that market, right? If there is more people willing to buy and sell, then the spreads can be lower. But then you're going to see that there is sometimes during the day where there's going to be higher spreads, and then sometimes when there's going to be lower spreads. So to choose good broker with good spreads, or to be careful with spreads, you can either choose a broker that offers 0 spreads or very little spreads. I use Deriv. I'll leave a link below if you want to choose them too. You can also look into the market and try to only get involved when there is less spreads. And I'm talking if you are doing scalping. If you are placing swing trades and all other things like that, then you are most likely not going to be crying with these spreads, because you probably are going to be paying 3 pips in spreads, while least you are going to be making like 80 pips in returns, right? So it's not going to be affecting your market, like your account like that. But if you are placing like scalp trades and you are making 7 pips per trade, you are targeting to make like 7, 10, 6 pips per trade, and you are paying 3 pips in commissions or with high spreads, then that means you are paying like 20% of all your profit in spreads. But if the market is going to the loss direction, you are not gaining from that, then it becomes a zero-sum game, a minus-sum game for you. So you're not going to profit like that. So make sure you choose a broker with less spreads, and also make sure you trade with pairs that have less spreads, because also it changes depending on the pairs that you are trading. That depends on you and how much you want to be risking. So make sure you choose that wisely. So my question is, let's say you have $100 in your account right now. Would you go with swing trading, or would you go with scalping? What would you do, and what type of trading would you do? So if you want the answer to that question, then make sure you read the article that I will link below if you are on the website. But if you are on YouTube, then make sure you watch this video appearing on the screen right now.